Okay, Assalamualaikum. So today I will cover the second part of chapter 3, 1 and 2 bar price pattern. Okay, so before we continue with the 1 and 2 bar price pattern, so I would like to recall back the previous chapter 3, previous section, the part 1 in chapter 3, we have discussed about the reversal and continuation pattern. So under reversal pattern, we have discussed double top, double bottom, triple top, triple bottom, and head and shoulders top and inverse head and shoulders. And for the continuous pattern, we have discussed flag, pennants, wedges, triangles, cup and handles. Okay, if you have any questions regarding those patterns, you can directly message to me or us in a groups. Okay, for today's lesson, we will discuss about 1 and 2 bar price pattern. So this 1 and 2 bar price pattern is related to the pattern appear when we use the bar chart. Okay, if you remember, as I mentioned earlier, as a chartist, we can use to choose either a line chart, bar chart, or a candlestick chart. So this 1 and 2 bar price pattern only available for a bar chart pattern. Okay. So as mentioned here, the price pattern we have considered so far takes some time to complete. For example, in the continuous patterns, flag or pennant, it takes not only 1 or 2 days. It takes maybe 5 days, 7 days, or even up to 2 weeks, 3 weeks, 1 month, and etc. So these situations make us the traders or the investor difficult or need to wait for quite longer time before they can make a decision either to buy or to sell. So by applying this 1 and 2 bar price pattern, it's really useful especially for intraday traders, whereas the intraday traders they need make a quick decision for very short term price. So under this 1 and 2 bar price pattern, okay, it reflects changes in psychology that have a very short term influence on price. It's meaning that the formations only require 2 days. Then the traders or the investor can use those formation to make a decision to buy or to sell. Okay, 1 and 2 bar pattern should be interpreted as shade of gray rather than a black or white because some patterns offer stronger sign of exhaustion than others. Okay, there are some ground rules to bear in mind when interpreting this information. The first one, they generally reflect exhaustion point. Okay, and then the second one, in order to this phenomena to be effective, they must have something to reverse. This means that top should be preceded by meaningful rally and bottom by sharp sell off. Okay, so the 1 and 2 bar price pattern only can be useful or can be detected in the situation whereas the chart already reached the top or the peak and the low or the throats of the pattern or the trend. Okay, I'll show you later. So for and then as I mentioned earlier, it's not a color but the pattern itself is more important rather than the color. Okay, 1 and 2 bar price formation may sometimes experience retracement move in similar way to classic price pattern since the extremes of most of these formations represent emotional whereas support and resistance area on the chart retracement offer lower risk entry point. Okay, so this 1 and 2 bar price pattern we can divide into two. First, the outside bar pattern and the second one is inside bar pattern. So for each of the outside and inside bar, we divide it into two, which is bullish and bearish. Okay, so first we will discuss about the outside bar pattern. So outside bar pattern are those in which the trading range totally encompasses that of the previous bar. They develop after both down and up trend and represent a strong signal of exhaustion. Okay, as I mentioned, it should be appear either in top or bottom. Okay, later in the next slide, I will show it to you how it look like. Okay, figure 10.1 represent a bearish outside bar pattern. Okay, so this outside bar pattern, the bearish outside bar pattern, the function is to identify the reversal. It's similar to the reversal pattern. If you remember, like double top, triple top, or head and shoulders top. So whenever you see those pattern appear, so it is a signal of reversal. So for a bearish outside bar pattern, the preceding trend should be an uptrend, and then okay, this is the uptrend. So and then when it reach a top or the peak of the trend, which is in this situation, it tested the resistance line, and if the price fail to break out the resistance line, the price should decrease or make a correction. Okay, if you see this pattern, for example, this is the top, okay, this is the peak, and then a create higher, and the next one, the next day bar pattern is bigger or longer or wider than the previous one. So this one we call it as outside bar pattern. Okay, so this one this figure try to draw the full bar. If you remember this type of pattern, we can see this in the candlestick chart pattern. So in the candlestick chart pattern, okay, if you see, whenever you see this type of candlestick pattern, this is called as engulf pattern, which is the latest pattern overcome the previous one, preceded the previous one. If you see, the higher or bigger the transaction, so the price movement is more volatile. If I can see that compared to the previous one. Okay, so the second one, we will have a bullish outside bar. Okay, bullish outside bar will appear at the trough or at the lowest point of pattern or chart. Okay, you can see the previous one, the preceded trend is downtrend, and then the price testing the support line, and if the price does not break the support line, it will bounce back, and confirmation of the reversal when we see a movement of the price, the changes in price in the latest day is higher compared to the previous day. Okay, as I mentioned just now, this, whenever you see the bearish outside bar or bullish outside bar, it's a reversal pattern. So whenever you see that the bar formation, something like this, so it is a signal of reversal pattern. It means that if the previous trend is uptrend, so whenever you see this pattern, is a first signal that the trend will reverse from uptrend to downtrend. Okay, or you can see that it may be a signal of a correction. For example, if you still remember the 1, 2, 3 formations, okay, is in a long term or in a short term. So whenever the price increase, they will make a correction or pullback. So whenever you see this one is a signal of pullback, and whenever you see this one is signal that the price will bounce back. Okay. So there are several guidelines for deciding on the potential significance of an outside bar. Okay. So first one, the wider the outside bar relative to the preceding one, the stronger the signal. Okay. So the sharper the rally preceding the outside bar, the more significant the bar. Third, the more bar encompass, the better the signal. Fourth, the greater the volume accompany the outside bar relative to previous bar, the stronger the signal. Okay, number 4 ni, if we relate to the, if you remember the Dow theory, one of the principle of Dow theory, volume must confirm the trend. So whenever you see those formation and the volume is high compared to the previous one, so it show a stronger signal. Okay, then the closer the price to the close to the extreme point of the bar away from direction of the previous trend, the better. Okay, so this is this figure 10.3 showing different characteristic of outside bar as mentioned just now. Okay, so this is the first one. The wider the bar relative to preceding bar, the better. So means that if you see that the changes of daily price is bigger compared to the previous one, okay, if you can see that the difference between open and high, open and close is wider, so it's a good or it's a strong signal, okay, compared to this one. Okay, and then this one, the sharper the preceding trend, so you can see the curve is more sharper compared to this one more flatter, so this one is stronger. Okay, and then the more bar it compass, the better. So means that the definition of more bar and compass. So this bar, okay, they are encompass these two or the 3 days or the 4th previous day punya bar. Okay, and then we have inside bar pattern. So inside bar pattern is the opposite of outside bar pattern. Okay, so for inside bar, we also have a bullish and bearish. Okay, so it's easy. So if for the outside bar, the first day should be smaller than the second day will be wider. However, for inside bar, the first day is wider and the second one is smaller. Okay, so if this one, you can see this in a candlestick, we call it this pattern as harami pattern. Okay, this one harami pattern. Okay, so this is inside bar. So it will act, the position should be similar to the outside bar. It should be located in the lowest or the trough point or at the top or a peak point. Okay, the last one is two-bar reversal. Two-bar reversal is classic way in which the chart signal exhaustion. This pattern develop after prolonged advance or decline. Okay, so this is the example. Okay, the first bar open near low and close near high. And the second bar also almost similar. Okay, open near previous close, closing near previous high. So this show a bearish two-bar reversal exhaustions. Okay. So for exercise, we can see any live chart later on and then try to detect inside or outside bar pattern. Okay, so that's all for this section. Thank you.